There we go.
All right, party people, this is your man Griff coming to you with another video. Today we have Priscilla Murtha. She is a loan signing agent, notary signing agent, underwriter, real estate agent. She's a lot of different things. So I'm gonna just throw it right on over to Priscilla. She's going to give you her background, and we're just going to talk about the effect of when notaries don't do their part, how it affects the whole process. Now, if y'all remember, I did a video about the loan process some months ago, and I'll link it in the description of this video that talks about how it starts with the loan officer, then the processor, then the underwriter, then the settlement people, and then it comes to us, the notaries, either by a signing company or directly through the title company. So she's going to cover that and talk about how what we do affects many different people when it comes to getting these loans executed properly. So Priscilla, the floor is yours.
Well, good afternoon, everyone, or good morning, wherever you are in the world watching. And happy Father's Day to you, Mr. G. I just started calling him Mr. G. That's just the name I've come up with him. But happy Father's Day to you and your family.
Thank you.
And the fact that you're working on Father's Day, happy Father's Day to everyone else out there who may be watching as well. So yeah, so my name's Priscilla, and Mr. G actually introduced me basically just what he said. I mean, I am a notary. I got my notary license long ago, over 10 years ago, but actually 15 years ago. But when I got my license, I got them just to do notarizations. Later on, as I moved throughout my career in the financial industry, I decided to get my real estate license. After I got my notary license, I've been working in the finance and sector, and I decided, you know what, I'm going to get my real estate license. And I started working with realtors and real estate agents, and there is a difference, as Ms. Levette on the other day said. And then I decided, hey, I like this. You know, I could do this. I could go to sales, and I think people were saying you do well in sales. So I decided to switch and go into not just the financial sector, but to also learn about real estate. As a result of that, after talking with different realtors and agents and real estate brokers, they were like, well, if you're going to do it, do it right, because loans fall out and they don't, you get to the 11th hour and then the loan might not get approved and you're in the middle of escrow and something happens and then the loan just drops out and you're wondering what just happened. So what ends up happening is when that happens, that's where the underwriter comes in. And that's where we come in to do and check and say, what is it that went wrong with this loan? Why did they not qualify, or why will they qualify? But anyway, after doing that and getting my real estate license and learning about the business, I became a senior underwriter so that if I ever decide to start selling homes or moving forward, I would know what to do so that I didn't have loans dropping out left and right, because you put a lot of time and effort into these matters, and you don't want to get into a deal and then find out after 30, 45 day escrow, oh, the loan just doesn't qualify. Okay, you just did all this work as an agent. You really don't have, your time is money. And when they say time is of the essence, that's like a real term. That's not like something that just is made up. So you really have to be on top of it. So fast forward, I was in school as well and did my MBA, just trying to be superwoman at the same time. But, you can only do so much in a day. But I also have an MBA, and I am a real estate broker. I have a broker license. So not a mortgage broker, real estate broker. So, I did the steps. When I first started out in the industry, I decided to get my real estate license first. You had to be a real estate agent first for 2 years before you could then apply to become a real estate broker. You had to learn the business first before you could say, well, I'm just going to be a real estate broker. But I knew after a while, I was like, I'm going to want to do my own business. And my broker at the time, he's like, well, you need to learn the business first. You just want to go in there first. And so I did that, learned the business, found out the insides and outs, and then move forward from there in order to become a real estate broker. And I did that in a way when everybody was saying, oh my God, it's saturated. The market's so saturated. Why do you want to get your real estate broker license? I'm like, okay, yeah, I hear you, but I'm still going to go ahead and get them, because in the end, if I decide to do anything with it down the road, I'll have it. And it was hard then, and it's hard now. Now you don't even have to wait. If you want, you can just jump in and get the real estate broker and license at the same time. I'm here in California, so for your state, whatever applies. But during that time, when the market crashed, and it did crash, fortunate for me, I knew how to underwrite loans because I worked with loan officers, escrow officers, and title as a real estate agent at the time before I became a broker. And I learned all the insides and outs because I decided if I ever decide to do this like sales full time, I need to know what I'm doing. And I don't want to do all that work. And then, you know, agents would tell me the deal just fell out. I don't know what happened. Just fell out. Okay. Why don't you know what happened? You're paid to know what happened. You're making all this money and you don't know what happened. I'm like, okay, right. No, I can't do that. That's a lot of work just to the deal, the loan, because of the loan. So I realized I need to learn that side of the business as well. So you want to know, I'm telling you this story to make it simple to you to know and make it plain, I guess, to understand that you want to know the different steps of the business you're in, which is doing your loan signing. Not just, oh, I just need to get in there and have them sign, then it's all good. Like you want to know the steps of how it got there. And that's where I'm going to next with the story here.
Gotcha.
So yeah. So once that all happened and learning the business, I was a senior underwriter for a large bank, one of the top 3 banks or top 5, I would say. They were number 1 at the time, and I think they still are, for 8 years. And I was a senior underwriter for them. I did several different roles within that company, but I was a senior underwriter. Unfortunately, they wanted to move our operations to New York, and I just couldn't make that move because I'm on the West Coast. I'm in California. Gotcha. So that didn't work for me at the time. And so fast forward, I was like, okay, well, you're moving there and I'm going to stay here. So this not going to be a match, but it's okay because I learned a lot from them. I learned a lot from what I was doing. But I guess what I'm saying, fast forward to that, your loan signing is part of what happens when the process. So that leads me to my point of what I do as a senior underwriter. I'm a contract underwriter now because basically I work with other companies who will contract me out to companies like those banks and lenders, which those words are used interchangeably. Banks and lenders are basically people who lend their own money. Mortgage broker is someone who shops your loan.
Okay.
So, yeah.
So the broker is the one that shops it around.
Right.
And then the lender is the one that actually is, and the bank are the ones that's giving the money.
That is correct. Okay. They're the one lending their money to the borrower. So the mortgage broker, those can be like an intermediary between the person who's calling them, and they might be able to get you better rates sometimes, not always, but sometimes the mortgage broker can get you a better rate if they go to maybe a bank that they know, and they have to build those relationships as well with the big banks and other companies who have the money to loan. They have to have like actual funds to loan. And so they can say, oh, well, I can get you a better rate than your own bank. Sometimes that's possible, sometimes it's not, but it just depends. Right. So as a result, before it even gets to after it gets to those people, the person that's calling you is the borrower. They're going to be calling in. They're going to say, okay, I need to either get a loan, to refinance, to purchase, to get a HELOC, to get a conventional loan. And at that point, that's where the mortgage broker or the lender is going to come into play. I guess the moral of the story is going to be, these are the several to 8, there's like 7 or 8 different people that you have to actually come in contact with before the loan signing agent ever sees the paperwork. So, and there's, when you got that many people involved, there's a long trail that's there before you ever, it's not just you getting the documents and you say, oh, go, yeah, sign here, sign here, sign here, sign there. There's like a long list of people that's touched this loan. That's kind of what I want to explain. So when you're ready, I can just keep going.
Oh, no, that is perfect. That is perfect. Because one of the things that I've learned over the years is that when it comes to a notary signing agent properly executing the documents and notarizing, I think especially if there's a lender involved or a bank, they will be more appreciative of us doing the notarizations correctly than probably anybody in the process. I mean, I think everybody else would be happy, but that lender, because they want to get that money out, and they're like, okay, if the notarizations are done correctly, then we can record the deed and everything properly, and then we can lend it, because the lender is the one who's talking to that borrower the most.
Right.
So when the lender has to call the borrower and say, hey, I'm gonna have to have you re-sign these documents, Why? Well, the notary didn't do ...
Mm-hmm.
And that's why I keep trying to get notaries to understand you don't want to be the person who didn't get that part done correctly. Now, just human nature, there's mistakes that have happened somewhere along the line, but you want to try to minimize that to the best of your ability so that you're not affecting negatively a lot of people in this process. That's what I'm hearing you say.
That's exactly it. Because by the time that the loan signing agent gets the documents, the loan is coming from the borrower to the lender slash bank slash mortgage broker. Then it goes from them to the loan officer who says, okay, we're going to sign this loan to you, depending on if they're doing a refi or purchase or a HELOC or a construction loan.
Right.
And then they get that. Then they're going to work with the borrower, and then it's going to go to a loan processor. Loan processor is going to get the paperwork, gather everything, make sure everything's in order, get your W-2s, your tax returns, depending on what type of borrower you are. Then from there, it's going to the underwriter, which is where I come in. So I'm now going to be looking at your capacity to repay, your credit, to make sure that you have the ability to repay and that you pay your bills on time. You're going to have your collateral. We want to make sure that your home, the appraised value comes in correctly and that the home appraises at what you're saying on the 1003, which is your uniform application, that it is appraised at that and the appraiser matches up, that it's, worth investing in. And we want to make sure that, your stability is there. So you want to have those things in place to make sure that that stability is there and you have the capacity to repay. Once that happens and we gather your information, I've confirmed, yeah, they make this much and the appraisal is good, and we've run it through our underwriting systems, whether it be DU, which is desktop underwriter, or Freddie Mac, which is loan proctor. There are two different automation systems. Sometimes you'll have to do what's called a manual underwrite, depending on the amount of the loan. Sometimes jumbo loans that are over a certain loan amount, banks will want to do a manual underwrite. They don't just want to run it through the automated system just to get a quick answer. They take a little closer look because sometimes jumbo loans, even if you got high FICO and all of that, can be somewhat of a risk. And then once I say, yeah, everything matches up, they're good, job is good, everything's great, and I confirm everything that's there, and it's all been confirmed and all been checked out and everything, all I's are dotted and T's are crossed. At that point, then it's going to be now sent over, and now there's another, they're still involved while we're doing this, escrow and title. So escrow and title is going to be looking at this while we're doing our part. There's a background part going, escrow and title is reviewing to make sure that, hey, title is clear. There's no cloud on title. There's no mechanics liens. There's no federal tax liens. Because when I look at that, I'm saying, okay, well, I didn't see anything on there. But then if they say, oh, wait, hold on. Oh, they just sent over a new updated title. Or if I see something on there, I say, well, this is on there. Is that clear? Is that paid? Without that mechanics lien being taken care of, or the tax lien, we're not going to be able to make this move forward. So we can rush this, but it's not going anywhere until title knows that that's okay. So that's where title's going to be searching to make sure that that's in order. Once they clear that, and you say, oh, no, that's clear. Now we're working with escrow. Escrow is going to be gathering other documentation. They're going to do the settlement statement. They're going to make sure, which is basically, they're going to collect your earnest money. So when you pay an earnest money deposit, say for a purchase, or even if you do a refi, that goes to the escrow. Escrow does the settlement statement for that.
Gotcha.
So so once they do the settlement statement, they're going to say, okay, Jim is getting this much, Tim is getting this much. If you do a purchase, they're going to collect your earnest money deposit and indicate all of that lined out in the settlement statement.
So what that tells me then, let's say you have a purchase and that's going down, and for whatever reason, the person doesn't have their earnest money together. That means that can slow everything up.
Oh, absolutely. Yeah. If
the document's not going to get there on time.
It is not going to get there on time, and it's not going to, and it may not close on time because as soon as the offer is accepted on a deal, if you tell them you're going to have your earnest money deposit in 3 to 5 days, and if your realtor, agent, broker, whoever is not on top of it, real estate broker, to get that into escrow, the clock's already ticking as soon as you sign the contract. also for realtors and agents and real estate brokers, we know that that word time is of the essence is like a term that's a real legal term.
Gotcha.
That you have to have that stuff in on time. And if you've agreed to close by, say, 30 to 45 day escrow, you need to try and stick to that. And if you don't, and you go outside of that, the seller or whoever you're working with could say, you know what, the deal's off because now you're in breach of the contract. You didn't follow through and you didn't perform what you were supposed to do on your end of the bargain. So it can delay a lot of things and hold up a lot of things, as you said.
So all of that going down. And one of the things that I learned is that sometimes the underwriter may say, look, I need to know this. The borrower or purchaser, whoever's getting money, they weren't clear as to why there was a gap in their unemployment, in their employment.
Exactly.
They wasn't clear on a gap in their employment. They might have told us about this, but they didn't tell us about that. So when we really run the numbers, it looks like there's a 3 month, because if I'm not mistaken, y'all want to have everything accounted for, you know?
Yes, you have to have everything, even with COVID, when it happened, like for self-employed borrowers now, like yourself and I, they want your tax returns to show, you know, they usually like Fannie Mae, which is one of the, you know, people that with their guidelines, and then we have Freddie Mac. Fannie Mae say, well, we want 2-year tax returns. Sometimes when you run it through their, you know, desktop underwriter system or the loan proctor, it'll say, we only need 1 year. But that's only because you've been in business maybe longer than 2 to 5 years and you have good stability there, your assets are good. So they may not need as much information. But when COVID happened, Fannie Mae and Freddie Mac both stepped up their game and said, okay, this is a little bit different. And we need to know people are working. We need to know that they have their income is on point and that it can be supported. A lot of businesses, unfortunately, they apply them loans because their income had dropped dramatically.
Right.
And so I know it wasn't their fault, and no one's saying it's your fault, but at the same time, you got to think, okay, if this was my money as a bank, would I loan it to you with that high of a risk? You know, your fault or not, we know COVID's no one's fault, but it happened. But at the same time, the reality is it's about the investment or the, you know, should we take this risk? It's assessing the risk. So if you have been in business a long time, but your income dropped a lot, if that makes your debt to income ratio shoot up, which is basically what you have coming in versus what you have going out with your gross income, you're probably not going to be able to get the loan. Now they're getting a little better with it. But they still have those guides there in place where they're specifically called COVID guidelines that are overlays on top of the regular Fannie Mae and Freddie Mac.
Okay.
Guidelines.
Yeah, because in the documents, I see a lot of times they have the COVID agreements that you're not going to be losing your job. You're not in forbearance, because one of the issues is that people was going into forbearance and then trying to refinance. And then when they go to pay the loan off, it was at a different payoff rate because 3 or 4 months of mortgage has, you know, payments been put to the rears, and the payoff balance amount that the new lender had got was different than what it actually is, because the borrower didn't tell them about the fact that they had a 3-month forbearance.
Right. And you are correct. And at one point when COVID happened, when it first happened, the banks were like, if you're in forbearance, no, you cannot get refinanced, because they really didn't want to take that risk of like saying, okay, well, we know they're in forbearance, but they're still working somewhat. They just would say no. But now they've loosened that a little bit to say, no, if they're in forbearance, as long as they have paid it within 3-month time frame, that's fine. And they're current now. Is you can't be in forbearance and try and refinance, like, but you have to be out of forbearance. You've paid that amount up, or they put it on the end of the loan. And then you can now go ahead and refinance as of today that I know of, unless it's changed over like overnight, but I don't think so. But they said that at this point, if you're in forbearance and you've become current, or you've had to put on the end of the loan, you can get in and buy a house or even refinance. You just have to be current, and it has to be put on the end of the loan. You can't like have it where you're in forbearance and trying to be, you know, get into something right now. You just need to have that paid up or put on the end of the loan and your loan brought current. Correct. That's the key. Within 3 months of being current, you have to be at least 90 days out of forbearance in order to go ahead and be able to qualify.
Right. So what I'm seeing here is excuse me, as the notary, we're sitting here waiting for orders to come in.
Mm-hmm.
So at this point, the notary is not even aware of any of this stuff going on. We
Right.
don't know that John and Jane got any of this going on, whether they buying, selling, or refinance, or even if it's a reverse mortgage or anything. The person is trying to borrow some kind of money or sell a property or whatever, and there's all these issues. Now, what that tells me, and this is one of the things that I've been learning, and hopefully I've been trying to communicate it correctly to the viewers, is that if a month is slow, let's say there's multiple people in your area that got these issues,
Mm-hmm.
they're not answering the underwriter, they're not being responsive, they're not being truthful. Y'all got to figure out this, that, and the other. Are you in forbearance? Are you not? Okay, you've only been 2 months out of forbearance current. Well, we can't close because we need you to be 3. So whereas we was going to have, let's just say 25 closings in the month of May, but now we find out that half of that or more, y'all, we got to wait another month. So now for that company, the amount of closings they thought they was going to have in May has gone down.
That's correct. And that's another thing. And let me just be clear on that, because I don't want anyone to say, well, that's not for every company. Okay. Every company has their own deals that they do as far as in their own overlays. So when I say 90 days out, I don't want to call me and say, oh, well, Fannie Mae says it only has to be 60 days or Freddie Mac says this. I understand that. Every lender has their own rules and regulations as far as overlays go. Fannie Mae and Freddie Mac are the standard. And then the banks, what they do is they put overlays, meaning they might say, and on top of what Fannie Mae is saying, I want X, Y, and Z. Or I want 90 days. They need to be out of forbearance for 60 days, 90 days. 30. So I understand it is different, but that can affect the time frame of things happening. But that kind of stuff right there in terms of, at the end of the loan, the loan would not even be to the signing agent. If we knew, we're going to know that once the loan processor gets the file and comes to us, we're going to already know that based on running your credit and stuff and talking with the bank if we have to your lender, if you're in forbearance, out of forbearance, when you got out. I mean, we can request all that information and get that. So it's not even going to be in your hands. You're not going to get to that step until we figure that step out. Once that step is figured out, but we will then get it down the line. So by the time it gets to you, it's gone through a rigorous process. But prior to the loan even closing,
right,
as an underwriter, we're going to double check, call. There's verification of employment, verification of income. If they call and they say, is this person still working here? Does this person still have this job? They're going to check that. And if they check that, even after you sign, at closing, they call, and they do call. It's not a if, it's they do. And they say, oh no, their hours have dropped. It's only 20 hours a week. Really? Oh, okay. We're going to have to send this back to the underwriter, re-review the file. Also, unfortunately, they're probably going to be laid off in the next 90 days. We've given them notice. Right. If that happens, the whole thing starts all over again. Back to the underwriter goes, the loan officer is notified, and no, we're not closing. And then that's where the realtor, agent, real estate broker is going to be like, wait, what just happened? Right. Oh, they lost their job. Well, we're already in escrow. We thought we were down the road. Well, you lost the job. They lost the job. It's nothing they can do. We're going to work on it now. The other agents will say, okay, let's see what we can do to work this out. I've seen this happen. I've had this happen. And people say, well, let's work together, see if we can get this still to close. We got to come up with a plan. Or if they have a second job, we can say, well, let's see what their second job can offer. Maybe they can get qualified for, let's see if we can get them qualified for maybe a little bit less. And then they have to come up with the difference. I've seen crazy stuff happen in the background that you would be like, I can't believe this is happening right now, but it does happen. And we come up with, oh, okay, they don't qualify for 600,000. They qualify for 525. So either you can come up with the difference, or we can add another person to the loan. Mm-hmm. And they got to have great credit. They got to meet the standard. But, and then people will restructure their loan all the time. Loan officers will, if they're really innovative, they will come up with a way to make it happen. And in a good way. It has to be within the guidelines. I'm not saying create something that's not even possible. I'm saying they will come up with ways that fit the Fannie Mae, Freddie Mac guidelines that says you add a person on loan, X, Y, and Z, and they just do what they need to do in terms of making sure it fits those guidelines. And sometimes I've seen them pull it off, and it's like, wow. So the escrow is thinking that the deal might still work or it might be done. Then they call the agent or they call, and say, yeah, the underwriter was able to get that to go through. They
Right.
figured out something. They knew this. That's why it's good for loan officers to know their craft, because then they can come up with innovative ways that fit the guidelines for Fannie Mae and Freddie Mac as well, that will allow their borrowers to be able to get their loan.
So, and everybody, what we're doing here, we're setting the stage so you can understand, prior to the notary getting the notification, getting assigned, and getting the paperwork, there's all of this stuff that's going on to try to get things straight. So notaries are constantly saying, and we talked about it a little bit with Levette, that notaries are constantly like, well, the signing company is late. They're always late with the documents and this, that, and the other. Well, the signing company is just a middle person. If they're being late with the document, it's because there's all of these other factors that are in play, just like Levette was talking yesterday.
Yes.
And just as Priscilla is saying today, there are other factors. Now, if you understand that, so here's where, to me, the most important part is, and I want you to talk about this. Let's say everything is in place from the settlement company all the way back to the lender. The borrowers, everything is straight. Now, when the notary gets the documents and the paperwork and goes to the signer's house, how does the notary not doing their part, which is what they're commissioned to do, which I've always said over and over again, we're commissioned by our state to properly notarize documents for the residents or anybody who's in our state. So now the notary has the documents, the notary is there, and how does it affect everything that y'all have worked hard to get straight? How does the notary not doing their part in properly notarizing, executing, scan backs, so forth and so on, how does that affect the whole process?
Well, it affects the process a lot. From the time is of essence, meaning that, you have to remember that real estate agent, real estate brokers, anyone in real estate, as far as that's doing the sale, is tied to a contract as well. So there are dates and times. You got 3 days to do that. You got 5 days to do that. You got 17 days to remove contingencies. So every contract that is set up, while they're waiting to make sure they get that done and it closes within that 35-day escrow, whatever time they've set up, if they make it shorter, if the loan doesn't close, that affects the realtor. Then it affects the loan officer, because the loan officer is like, well, man, that was on my numbers and I had that down. It was good to go, because some of them are paid commissions. Some are maybe paid a draw, as well as bonuses and commissions. Same with the, loan processors. They're like, hey, I got that one down. That's going to be good. Some of them are paid just a base salary, but they also get bonus. So it affects everybody. Everybody's like waiting for that to close. And then the lender, of course, that's on their books too. It's all bulls back, and it's just a domino effect. So if you mess up on the documents, meaning you sign in the wrong place or they sign in the wrong place, both of you guys sign in the wrong place. Okay, so now that agent or the signing agent that referred the job to you is now going to have to either pay someone else to go back, or you may have to go back in order to make the correction. And I always say that sometimes you need to give more than you get in order to get more. And what I mean by that is, if they ask you to go back to a deal, you say, well, I've already put too much time into this and it's not worth it to me. It's your job. So it's like, don't have to do something. And because they ask you to go back, if you don't have time, you don't have time. But if you do, make the time, because you never know. They'll say, oh my God, that really helped us out. And there was so much writing on this. And, the borrower is through the roof. So you really saved our butts. And so we really appreciate it. So sometimes it's better just to do a little bit more.
Right.
And even if you're not getting paid for it, don't make it always about, if I'm not getting paid, it's my time. Well, you weren't even getting paid before you did this. So.
Right. Now, help me understand, and help all of us understand, from your perspective as an underwriter, what have been some of the issues that you've seen with documents coming from notaries that caused the deal not to close? And expound on that. When you say not to close, what does that mean?
So what that means is if it doesn't close, I'll start with that part first, meaning that the deal is off. You had them sign documents and it doesn't mean anything. It's like we just signed some paperwork and now the lender, the loan officers has been notified from the lender and from escrow and title. These are all wrong. This is not signed right, or something's not in the right place. Or the borrower has called in and said, these interest rates are wrong. And the deal doesn't happen basically. So
Right.
basically it's like nothing happened. They signed it, but you really don't have a deal. Nothing is going on. It's like nothing. It's just a nothing. It's a nothing burger. It's nothing there. So basically it's like starting all over if it can't be fixed. Now, hopefully the loan officer is on his A game or her A game and it's like, hey, wait a minute, I got to get on the phone and make some calls to this lender because that's a mistake that should have been done right. So then it has to go back to title or the lender or mortgage broker, whoever, to make the corrections. If the rate is incorrect and they can get that stuff corrected fast enough, or if it should have been a fix to a conventional 30-year fixed rate, now that the closing disclosure has got to be all redisclosed again. There are certain things that have to be redisclosed if anything on the closing disclosure changes. So in that case, it may not happen. But in terms of you signing the wrong spot or having them sign the wrong things, what I've seen is that the deal is just done. If the borrower's not happy, the deal's probably not going to happen. And they're just going to say, you know what, it's just, it's not what I wanted, or I was told this and it's
Right.
that. I just rather call the deal off because now you've lost the trust of the borrower. And no matter how much you try and reel them back in, they're gone. You've lost them. So unless the loan officer has a good relationship with the borrower and can get them back and say, look, okay, first of all, this was a mistake on our end, and just fess up to it if it is, and then it can get corrected and it can still happen. But the biggest thing I've seen is just stuff that is signed in the wrong spot. The borrower said that I thought it was this amount that I was being approved for, but it was this amount, which I don't understand how they got that mixed up, because you were given a loan estimate at the very beginning.
Right.
When your application was turned in. So I don't know how you didn't see that they only qualified you up to this amount.
And I've seen that happen where the borrower thought that they was getting either a lower interest rate, or they thought that they was borrowing more money, or this, that, and the other. And come to find out, in every single case, they really just didn't pay attention to what was communicated to them.
Exactly. And that's usually the case because the loan officers, even if they're new, they're not going to make that mistake because all of what they do is based on that. So they're not going to, I'm not saying it can't happen, but it's, they really just have to be really green to really put down an amount that someone didn't ask for. And there's so many checks and balances in between from the time that they get it, the loan processor, the underwriter, title, escrow, they go over that. The loan estimate was sent to the borrower when they apply for the application. And then at the end, the closing disclosure is going to show that. And it's also going to show your breakdown of either if you're refinancing the money you're getting back, or if you're purchasing the money you got to come in with. And sometimes, even when you refinance, you got to come in with money. That's, some people think, oh, right, I got to come in. Yeah, because either your interest rate, you may be more of a risk. That's another thing you talked about the other day in terms of the taxes being short. So sometimes you may have to come in with money.
Correct. Now, one of the things that I recently learned, that sometimes when the notary hasn't done their part for us making sure the documents are properly notarized, meaning the venue's not correct,
right?
They don't have the right person's name in there. So when it says the foregoing instrument was acknowledged before me on this day by, and the notary is writing their name after the word by instead of the borrower's.
Exactly.
And then if something happens and they don't catch that, or they catch it and they ask the notary to fix it, what I've heard that has been happening is that sometimes because it goes past whatever contingent date or whatever,
contingency
right, cancel, that the borrower now loses their rate lock.
They can use the rate lock unless the loan officer locked it. Now your rate lock is usually locked, can be up to 60 to 90 days. But each time they have to relock it, it's like after they have to relock it, if the rate has gone up, the interest rates have gone up, you lose that. So, and then if you happen to go past the contingency date that your agent or realtor or real estate broker has agreed to with the other person doing the other side as the seller, you can also lose your earnest money deposit. So it's a lot riding on it when these dates are missed, and when people miss dates and you have to go back and re-sign some. It's a lot going on in the background that you may not see as a loan signing agent, but there are a lot of contingencies and dates tied to this loan being signed correctly. So they can lose their interest rate lock, and they can lose the amount of their interest rate if it changes. There's nothing the bank can do if the interest rate says jumped up from 3.25 or 3.275 to now it's 4.25, unless you buy it down, which
And
means
that's what
now
I'm
you got to pay money out of pocket that you weren't expecting. Okay, now they're like, you know what, the deal's off. I'm not paying that out of pocket.
Right.
That's not what I signed up for, and I don't want to have to do that. Yeah.
Now, this is what I recently heard, and I haven't, and this is the first time I've even talked about it. Other notaries have called me and talked to me about this because they've experienced this, is that because the notary made the mistake, the signing company has had to pay out of pocket to get that rate lock back. I've heard that because the notary did their job wrong, they didn't do what they were supposed to do. And it's like, okay, in order to get that rate lock, somebody's going to have to pay in order for that borrower, because the borrower, like you said, the borrower's like, I'm not paying it because it wasn't.
I'm not paying it. That's
so
it.
That's what I've heard, and I haven't reached out and confirmed anything. So if somebody knows something different, please say it in comments. But what I've heard is that in some cases, some of these signing companies will then have to maybe use that, I guess an E&O claim or whatever, something to where they have to pay to cover the loss that was caused by the notary, because they were the ones who picked us. They're the ones that said, I'm gonna pick Griff, and then Griff messed it up. So somebody got to pay to get that borrower's their rate lock back.
No, I haven't had that one happen, and that definitely would be something where, your E&O is probably going to be involved, their errors and omissions insurance, if that happens, if somebody's not willing to eat the bullet or eat the cost. I mean, and that's why you want to have everything on point, because that way, if something happens, you're like, well, hold on, here's what I did, and I stay consistent doing it this way all the time. So when you have purchases, I would just stay consistent, do it the same way. Don't get, oh, I'm going to segue this way and just kind of do it this way and just be in and out in 30 minutes. If you're very experienced and you can be in and out in 30 minutes, great. But if you're just starting out and learning, don't try and be in and out in 30 minutes. I don't even try and be in and out in 30 minutes, because I still double check myself, in particular when it comes even by real estate, because that's even more serious. Like, you can literally be sued. And, when you're selling real estate, it's no joke. But it's definitely no joke, even when, as a notary, it's just as serious as Mr. G has been saying. You don't want to get yourself in a situation where you went left instead of right, or I'm going to just try something different. If you stay consistent with how you're doing it and doing your signings, you'll be successful. Learn the right way to do it. Don't cut corners, and you should be just fine. But as far as that goes, Mr. G, I haven't had that particular one happen, but I wouldn't doubt that it doesn't happen. I mean, I haven't heard that directly happen to anybody that I've worked with, or any lender or mortgage broker or signing company.
Yeah, and I'm pretty sure they keep, they may keep that quiet because they don't want that to be out there. But somebody was telling me they was in some training and it was mentioned that that's some of the stuff that goes on behind the scenes that notaries don't see. That when they don't get those documents done correctly, somebody got to pay the cost.
Somebody will have to pay that, unless if the loan just drops out and the borrower just says, I don't want the loan. If you get too many of those, number one, then they're not going to use you as a, signing agent. Number two, the loan officer is going to have a problem with his employer if he's, working with, or if he's independent. The mortgage broker is going to be like, hold on, okay, that's costing us money. Then the lender's going to say, hey, you've had several of these deals with these guys and you keep losing deals. I mean, that's not good. Like, so
Right.
either your customer service is wrong, or you're not explaining to them the ins and outs before it gets to that point.
Right.
So I would say that stuff should be discussed up front, that if your rate isn't done by this time, your lot could change. If you want to buy it down, you can, but that's money that's going to come out of your pocket. If that's the case. If it's not the case, you need to know whose pocket is it coming out of, should that happen.
Right. And one of the things that I do, I try to approach the signings from the standpoint that, and I've had this happen, and when it was brought to my attention, the importance of me getting the documents notarized and scanned back same day was like, one person, I forget, I can't even remember who, but it was like, today is the last day of the rate lock. And I think it was even the borrowers that mentioned it to me, because they said, hey, we just want to know, are these documents going to get back there in time? Is everything going to be great? And I was like, yeah, why? Is there a problem? They said, because today is the last day of our rate lock. And if everything's not done right, then we lose our rate lock. And they had a good rate. And I'm sitting here like, okay, so that means you got me doing a closing on the last day of the rate lock, and I had no idea. I'm like, how many more of these have I done like this? So now my mindset is, every time I go into a signing, whether I know there's some notaries that are probably like, I'm calling and finding out. It doesn't matter whether you call and find out. Don't bug them people about that.
Exactly.
It is, when I go into a signing, today is the last day for the rate lock.
That's it. If you're going with that mindset, you're right. Absolutely.
That's the way I'm coming into this. Today is the last day for the rate lock. And if they ask me for scan backs, all I can say is it must be a good reason. Let me get the document scanned and move forward, because there have been multiple times it was same day funding. Matter of fact, I had a purchase.
Wow, that's tight. That's a rush.
Yeah, it was same day funding. And there was, I can't even remember how the lady found me, but recently I did a closing last week, and it was for a military couple moving to Pennsylvania. And it was a purchase. And the lady was like, can you do the signing? She said, can you scan them back immediately afterwards? And I was like, okay, well, I could carry my gear with me, but I knew there was no way as fast as she wanted them. So I took a chance. I took a leap of faith, and I asked her, I said, well, ma'am, how about this? Can I just scan back what y'all consider the critical documents?
Yes.
And she said, you know what? That's a good idea. She said, scan me back the signature page of the note, the deed, and the CD. And she said, that should be good. That should be good. So what I found out, and the reason why it was important was because some person, I don't know what his role was, but she said, I did all of that. She said, that's perfect. And also included the notarization part, because the signatures in this case was on one page and my notarization was on another. So I did the deed picture, the picture of their signature on the deed, and then my notarization, the note, and the CD. And she said, that's perfect. She said, because now so-and-so can get paid. So it was all about a particular person. I don't know what his role in this was.
Yes.
But she said the guy's name, and I'm not good at remembering people's names, so I don't. So she just said, yeah, it'd be good. I'll just say Mark. She said, well, Mark will be getting paid now. So Mark, this way Mark knows he's going to get paid. So the documents got shipped out immediately, but they needed them documents scanned back. So, and I've shared this, and this is my first time ever saying it publicly, but I've shared this with notaries who I've talked to. I said, look, if it gets critical, you can ask, are there critical documents that you need me to send back? Yeah. because see, when you're hot and heavy doing 4 to 6 of these a day, and they got to have the scan back. Now, there's some companies that scan it back just to make sure you ain't messed up.
Exactly. They just want to make sure, because they don't want hiccups at the last minute, right?
But if you know that there's a critical thing, if it's like, okay, yeah, this is same day funding, and you got 165 pages, even if you do have your mobile scanner set up, it's still got to take time, because to be honest, nowadays, with all the COVID stuff, You got to find a nice place where you can park and not be disturbed, you know, because nowadays it's like you park somewhere it's too long, people looking at you coming up to your car. You know, before COVID, nobody bothered me. Now, if I pull over to the side and I'm sitting there eating, drinking, just chilling in between people riding by, looking at me, I'm like, okay, leave me alone. So,
you want to know, who is this? Why is this person in our
and I'm in a public parking lot, minding my own business.
Right.
So I'm like, okay, can I just scan back these? And the reason why, because there's a signing company that I deal with, and that's what they ask us to do. Their documents are always 150 to 75 pages, but they say we just need a quick picture of the deed, the CD, and the note.
That's it.
That's what they say. We need to see those.
That's a good practice. And I like that you're saying that, because, and it's okay to call and ask. Like you said, don't feel like, you know, people like, oh, I don't want them to know. I don't know if I know. What's going to make them upset, the signing company or title, is if you do it all wrong or don't do it at all or do it, you know, halfway. They're going to say, why don't you just call us? We could have just, you know, because then that can make it, somebody's on it can just get it done, you know. And so it's better to go in, like you said, with that mindset that, hey, this is a critical, this could be a 1 day, same day funding. So I need to double check. Do you need these scan backs immediately? Don't assume in this, I'll just do them back tomorrow.
Right. And that, and there's certain companies that I know, okay, they need scan backs, and I can hope they just need to scan back. And one of the companies I figured out their scan backs, I think, is primarily because when I scan it back, they use that scan back to give a copy to the customer on CD. Because in one of their documents, and I happened to glance at it one day, and it said, we will provide you a copy on CD. And I was like, okay, so if I'm scanning back, that means there's no need for them to scan it to make a copy for the CD. That means they're taking my scan, saving it to a CD and sending it to them. So that's why I have to scan back. And it's a local company that I can drop it off to in 15 minutes, but they want every single one.
And the closing disclosure has to be given to the borrower 3 days before the loan is consummated, before it's finalized. They have to have a copy of that. That's per the Consumer Protection Financial Bureau. You can look that up. If I'm wrong, let me know, but I don't think so. But they have to get a copy of that closing disclosure 3 days prior to the loan closing out. So when you're doing a scan back now, if they're doing a same day funding, they've already gotten that. The borrower has already received that closing disclosure. But if you get one and they say, oh yeah, I need this like immediately right away, they're under the time of a clock. Somehow, some way, that might be the third day. And if you go past that third day, per CFPB, you're gonna have to get them another. You're outside the box now. You're outside the lines, and this is not the time to start messing around with the Consumer Financial Protection Bureau. You want to be on point with that, and they're one of the agencies that popped up as a result of 2008. So you just want to keep everything right. So if anything ever comes back, the lender can say, hey, we did everything right. Here's all our paperwork. We met the deadlines that you set in place, and the borrower had all this information to review before they agreed to this loan.
And see, and that's why I'm like, okay, so for some companies, I know there's some companies that are just, you know, they scan back. It's not same day funding. But what I've had to do sometimes is I will ask them, I said, okay, I got multiple signings. I know y'all want this scan back. Is this same day funding? I will ask them, because if it is, that's when I say, again, I know I'm repeating myself, but then I'll say, and I'm giving another scenario here. If I'm in a situation where I have multiple closings and somebody says, I need a scan back, and I know this company is very sensitive to getting scan backs quickly, but the signing went longer and it's making me late for my next appointment. Now I'm going to reach out to that company and say, hey, here's the deal. The signing went longer. I'm not going to be able to scan back immediately or full scan back because now I have to go to my other closing. What do you want me to do? I can drop them and you can have them tomorrow, or I could scan, you know, use my phone app, my Adobe Scan app, and scan back a couple of documents that y'all need, the critical documents that y'all want. or what do you want me to do? And then I let them guide me on what to do, and then I accommodate them accordingly. There's been some companies that have said, you know what, get the scans back when you can. Just make sure they make sure before you drop the documents, you scan.
Right.
You scan.
And that's a very good practice to have, is to just double check. Like, don't assume, because you just never know. And you don't want to be in the middle of them just be somebody to blame because the borrower is going to go ballistic because they've lost their rate, the rate's gone up, the cost has gone up, the loan amount is wrong, this is that, and they just need somebody to blame, and the lender's going to say, okay, oh my God, he didn't get this signed in time, or the signing agent, whoever. And we would hope in our business that doesn't happen, but we know, unfortunately, that finger pointing does occur when anything goes wrong. So if you have all your I's dotted and T's crossed, okay, so here's all my documentation. Here's what I did. I mean, if it blows up, I got all my information here to back up the decisions I made. And so I called Tim at 4:45, spoke to him and said, ... and this is what I did. And this is what he asked me to do. So you just document everything so that if it ever comes up, you got your records in order to justify whatever decision you made.
Now, to wrap everything up, from a underwriter perspective, I guess even a mortgage broker perspective, real estate, what is it that you need from the notary to ensure that everything goes smooth after you've worked hard, stayed up late, did everything you can, work with the borrowers, got everything, sent your little cousin, man, or TT out, say, look, go pick up the documents for me, this, that, and you've done all of this stuff to get this together. What is it that you're looking for from the notary?
So for the notary, what we need from the notary is basically to have the notarization done correctly, meaning that all information has been signed correctly. You're not there to go in there and explain to them, no, this is a deed of trust, this is a note, here's what it does, here's your rate. If they say, well, why is this rate like this? My sister got this much. What do you think? Is that a good rate? And then you interject and say, no, well, actually, you probably could get better. My friend's a mortgage broker. Okay, that's not what you want to go in there doing. So basically the company, the lender, bank, mortgage brokers wanting you to do, when they give you or signing agent, they give you the company, they give you the loan docs to go ahead and say, here's who we're going to entrust Mr. Griffin to do this loan. Mr. G, we want you to go out and do this. What you need to do, and he knows this, but then for all you others, when you go out, all the other notaries who are maybe watching, you want to get your signatures right. And this is why I was saying, and I kind of explained the process of all these people that it goes through that are waiting in the background, 8 different people, 7 different people I named off, right? Before it even gets to you. So you want to make sure you understand the process so that you're not just saying, oh, sign here, sign here, sign here, sign here. So in California, for example, the note is not, I would just normally sign it until I realized I found out from the NNA. No. There's the notice signed by, I would just be stamping and signing. And they said, no, as a loan signing agent, you just, as a notary, they're supposed to sign the note. And then on the deed of trust, they're supposed to sign that and you notarize that. You don't notarize, sign, note, and that. So me, because of doing real estate, I'm like, if it's not signed, it didn't happen. So sign everywhere. But that's not how it works. And so you want to know the process so that it makes sense to you. So when you look at something and you're interpreting it, you can actually interpret it correctly instead of looking at the deed and you're like, you don't even know what this does. You're just saying sign here, sign here. So it's important that you understand what you're having the borrower to sign. You don't have to explain anything to them. You can point them in a direction where they need to look for them to get the explanation they need. Or as Mr. G said, you call your signing agent company or loan officer to explain that to them. You don't do that. I wouldn't. I don't give them any legal advice because now you're in that section. So I would say, stay out of the section, the legal section, the legal box, stay out of that box. Stay in the lane of making sure all signatures are done correctly. Make sure you understand the documents that you're having them sign, even though you're not there to explain the documents to them. Once you do that, I think you're going to be on the road to success, and learn your craft really well. And And then just go out there and do it. As Mr. G say, I'm so busy with doing the real estate right now, I haven't even gotten out. So I would probably have to brush up myself on the loan signing. But I just know as an underwriter, when I do the underwriting, what, a loan officer who I deal on a daily would want to see in terms of the documents being done right and done correctly when they're sent back to title or to an escrow has to look at them, because nothing can get recorded if things are not right. The loan's not going to close. It's not going to happen. Everything's going to come to a screeching halt.
Now, with that being said, what's the likelihood that a loan officer or underwriter or any of the 7 people, that if they pay attention as loans are coming in, they got multiple loans out there. Mm-hmm. So let's just say in 1 week, they got 75 loans out there. And these 75 loans coming back, and they notice about 7 or 8, maybe 9 different notaries are always on point. Mm-hmm. What is the likelihood that that loan officer may tell that title company, who may have to tell that signing company, get this person? I need Gina on this here because I've seen consistently Gina's stuff is straight. I've seen Earl's stuff is straight.
It's very likely. Because they're going to say, hey, I never get any problems. They get their scan backs right. You want to always make sure after you do scan back, sometimes it come through and title say, they didn't even get all the documents over to me. I'm missing 5 pages. So I'm like, okay, well, just take a breather. We can just call them and see, maybe it pulled through with the pages. So, they get upset real fast. Cause like I said, you got all these moving parts in the background and they're panicked because they want to get it all done, but you don't see that. You just thinking, hey, I'm going about my day. I got the signatures. I'm sending it back. If stuff is missing on a consistent basis, that's a problem. And yes, you're right. They will just end up going with whoever's doing the best job all the time consistently. Now, that's not to mean that if that happens, they say, oh, well, it's missing 5 pages. We need those right now. Or if it's the same day funding, which is crazy, that's a nightmare going on in the background. Yeah. But it does happen. You want to always call, which is what I said about having your practice in place is, right. What you're doing in terms of on a consistent basis, and don't stag away from that unless it's a particular situation. But these are just loans. It's not brain surgery. You want to be consistent, just doing it, get a system and work with that system on a consistent basis to the point you can just do it with your eyes closed. You don't even have to think about it. Like you can just do it that way. And then you're right, Mr. G, you will start to get a lot more calls from them because they say, oh yeah, his stuff's, we're not even worried. And if you call them after you scan stuff back, I would say as a good practice is to call and make sure, hey, did you get the pages? Can you, or email them even, and just put it in writing that, hey, I sent you an email asking you, did you get it? You never sent back. So I assumed you got it. But if you do that and send over an email to them, or if you have a familiar person you deal with, you can just call them and ask them, did you get it? And they say, yeah. And if you're, have good standing with them, you're going to know they're going to hold to their word and they got it, got the information.
And see, one of the things that sort of dawned on me, and I meant to say something about this yesterday, and I forgot. When you really think about us as notaries, we took an oath to our state to do things a certain way. Yes, we're NNA certified, but we didn't take an oath to them.
Did I lose you, Griff?
Yeah. Hold on.
Oh, you cut out, audio went out a little bit there. Okay.
Yeah. Yeah. The thing is, we don't take an oath to the NNA. We don't take an oath to the signing companies. Now we have an agreement.
Correct.
To do things correct. But we never took an oath like, I do solemnly swear or affirm that I'm going to follow the laws of the state of California, Virginia, whoever. We did that with our state. So they expect us to abide by the oath that we have, that we made with them before we got our certificate. So that's why I'm real adamant about making sure you do stuff according to your state guidelines and laws, and then use the NNA to get the proper training so that you're covered in case somebody accuses you of not doing stuff correctly, and you can say, well, no, I'm following the necessary training.
Correct.
Okay. Which again, and again, I'm not picking on these non-NNA notary trainers, but to me, it is just important that the non-NNA trainers, if you're training people, and even the people who claim to say, well, I'm somebody's mentor, follow me on my journey, all of these people, you cannot be guiding people down a road that goes contradictory to somebody's state law that they swore an oath to.
Right.
That's how serious I look at this. And I know people are like, man, shut up. You now, but you really got to look at this, because
You really do. You really do.
really got to
It's
look
a
at this,
serious
because
thing.
if you start saying, hey, I took training from so-and-so, okay, but what did the NNA say? Because if the training that you took from so-and-so, if the mentorship you took from so-and-so is not recognized or won't be recognized by your insurance company or anybody, they're going to be like, okay, who are these people?
Mm-hmm.
Are they endorsed by the NNA?
Mm-hmm.
Are they, you know what I'm saying? Who are they that they teaching you? And you said you did what they said. Who are they as compared to the NNA?
Exactly. That's it. You're absolutely right. And that's what you should be following, as you had mentioned before. Follow the NNA rules. And that's why if you're a member there, you should, I mean, if you're not, I highly recommend this. You know, Ms. Gia said, call in if you have questions. You know, even if you have to call the title company or the sign agent, it's better to call instead of having to undo some signed document. Like, I mean, I take it so serious. Like, I treat it like a purchase contract, a real estate purchase agreement. It's serious. Like these dates and times and contingencies, that's no joke. Unless, even if they waive all that stuff and they say, oh, I waive it, I waive it, I waive it. Believe me, you can still end up in a situation. So you have to document everything.
Right.
And just, yeah, so you just make a call. And if I'm unsure about something, I'll call I have an attorney that I can call on, real estate attorney, say, hey, you know, they said this, and, you know, I just want to make sure I'm within it. Oh yeah, you're within the state guideline. You're within the Department of Real Estate. You're good. I'm good. If I have a question with dealing with underwriting, I'm going to go to our compliance division, or I'm going to go to our underwriting manager and say, hey, the loan officer is saying X, Y, and Z, and Fannie Mae and Freddie Mac is saying ABC. Now they're going to say, well, you need to follow ABC, Fannie Mae and Freddie Mac. Don't go outside those lines. Now, if it doesn't fit in our overlays, so unfortunately, I go back to the law office and tell them, unfortunately, I don't know maybe who you're working with that can do that particular deal, but you might want to just go to them because this lender is saying, they're saying right within the box. They're going to stay right in this box right here. Right. Because if they go outside that box, now they're outside of compliance rules and state rules and regulations, which now is going to lead to a problem, as you mentioned.
Yeah. And that's and everybody, all the party people out there, this is really what I'm trying to get down to. If you really listen to the videos that I put out there, listen to what me and my wife talks about. Yes. And to be honest, I've learned this from her, because she owns a cosmetology school and she has to stay within the state board guidelines. When she teaches people, it has to be according to the state board guidelines. And after being married to her for over 25 years.
Oh, that's awesome. Congratulations. Look at Miss G's on our A game. I love it. So you learned a lot of what you know, Mr. G, from Mrs. G, huh?
Yeah.
Okay, and that's good.
So when I got into the notary business, I started looking at, my mindset was like, okay, what are the regulations? And when I started looking, I'm like, okay, you got to follow these regulations. You got to be within. So that's why I'm saying it is imperative. And then to me, it's sort of contradictory a little bit, maybe a lot, when somebody says, well, you don't really need that much E&O insurance, but then you're not following your state guidelines, and you're listening to people who aren't teaching you according to your state guidelines, and you're not following what the NNA say, but you only want to have that much insurance when you're putting yourself into that much liability.
Exactly.
See, that's the part that doesn't make sense to me. And this is what I'm trying to do. I'm trying to get notaries to really think as business owners. Again, and I know people may not believe me, but I'm not against anybody training, mentoring, or what have you. All I'm saying is there's a responsibility that comes with that. And because we took an oath to follow our state guidelines, anything that we say out there, we have to make sure that it's not diverting people away from that and keeping them in line. I mean, a lot of people have gone to college, and you're real keen on making sure you take, if you're trying to be a molecular engineer, you're not going to take courses that are going to make it harder for you to become. You're not going to be over here in biochemistry unless biochemistry is directly related or somehow related to molecular engineer. If there's somehow it's related, but you're going to see it. That's why people are like, wow, I got to take all these PE classes or their electives. I ain't got time for that, because they look at it as a distraction and it keeps them from their main goal. So our main goal is to properly notarize documents. So anything that you're telling me, anything that you're asking me to do, telling me that I need to focus on in my business, if it's not centered on ensuring that I can properly notarize the documents, I don't need it. Now, I'm not saying you don't learn how to run a business, but what good is it doing running a business if you don't know how to do the business, which is properly notarizing documents?
Exactly. You're exactly right.
You have to know how to do that. Nobody is going to go to a mechanic who has the best looking shop, all the lifts, all of the workers, everything, and then you get in there and they can't fix nothing.
Right.
But we take the notary game and say, I'm not going to try to learn how to do this properly. I'm gonna just go out here and make money.
Exactly.
And then I want people to keep giving me orders and pay me, even though I really don't know what the heck I'm doing. And then you're paying people who aren't teaching you how to do what you need to do. And then you're not investing into yourself through the people who can help you, which would be the NNA or any of your state or local notary training.
Exactly.
So the bottom line, I'm really getting down to is this. If we're going to do this business, we got to do it correctly. We got to follow state guidelines. Like I said, I learned that from my wife. Got to follow state guidelines. But you can't follow something that you don't know. So that means you need to learn what your state guidelines are. Get your notary handbook. Get the state primer, which is a backup to your notary handbook. Mm-hmm. And I'm talking about the notary handbook for your state. Every state has their notary handbook or what they want you to do online. You can download it, print it, and refer to that. And if you're unwilling to do that, now you're putting yourself at risk. That's why I tell people, then you need to make sure you have insurance,
right,
cover you, because if you made one mistake, they might think you made 15 mistakes, which that one mistake that was $7,000 might turn into 25 mistakes at times 7,000, which could be more than your $25,000.
Exactly. That's so true.
So
that's very true.
Yeah. So that's what I'm saying. So thank you for your time today. Now, is there anything
welcome?
You want to throw out?
I'm so happy you was able to have me come on, and I really enjoy your work and you being out there to help people. And let's make sure everyone watching that we give Mr. G thumbs up and like and share his video, because he is out here giving knowledge to people and he's not charging anything, just to give knowledge. And it's knowledge that's valuable. Like, so, let's support each other in what we do. And especially if you know someone is giving you valuable information, let's be supportive of each other, because I said in the end of the day, you're going to want someone to support you. When you get on down your journey, you'll want the same support. So let's support each other in that way. And happy Father's Day every day, everyone. Happy Father's Day to you, Mr. G. And say hello to Miss G for me as well. I love what she's doing and everything with the cosmetology school. So keep up the good work.
All right. Well, you hold on while I end this video. Well, party people, thank y'all for tuning in. Really appreciate it. Look, we're here trying to help everybody get information. We just want you, I personally, and I know Priscilla, Lavette, especially my wife, all of us, we want y'all to do well in this business because we know you have it in you. But you can't do well in something that you don't know about. So that's why it's important for you to understand the whole process. And other people out there know the whole process. And that's why and people don't always share information. And that's why I'm going to do the best I can. If I have the information, I'm going to share it, or I pull somebody in who does have the information. So take what we said this evening, listen to it, apply what's applicable to you, do what you have to do to make sure that your notary business is successful and that you are doing things according to your state guidelines in which you took an oath to do. And once you got that down packed, then add in the additional trainings that are out there that are more designed to help you grow your business. And then depending upon where you live, some of that stuff is applicable, some of it is not. But no matter what, you can still make money in this business if you're doing things correctly. So thank y'all for your time, party people. We'll see you next time.